Rita Chiemenem, a fixed income dealer at Access Bank, joins us to discuss activities in Nigeria's fixed income and FX market so far this week. Rita, thank you for taking the time out to join us today.
Good afternoon.
Was the last trading day for the month of October, and of course we're expecting a primary market auction today. But what we're hearing is that traders are saying that there's a lot of uncertainty on what the stop rates could be at today's PMA, considering what the stop rates were at the last one. What can you tell us about in terms of market expectations and how things could pan out today?
For the primary auction today, we expect interest rates to hinge up slightly, coming from the previous rate. This is because of the OMO auction rates, which closed slightly above 14.5% on the last auction, which is an effective yield of about 16.95. So given from that, we expect primary auction to tend towards 14% or even get into that 14.5. Despite the liquidity, as you mentioned earlier, the FAAC that came into the system, about 300 billion, we've seen minimal activities at the secondary markets, the treasury bills market. Everybody's attention has been focused on the primary auction. So we expect interest rates to go up slightly compared to the last auction results.
Okay, for the bond market now, we did see a sell-off. I believe that was on Monday. Tell us about how the market has trended so far and what your focus are for today's trading.
Today, market has still remained slightly bearish. We've not seen the bids and offer are elevated, with everybody expecting the result at the primary auction. Tomorrow will be an OMO auction as well, and people, the market participants are expecting that rates might slightly hinge up from where we are at 14.5. We may see it go to 15. Who knows what the CBN wants to do at the OMO auction. So that has dampened a bit of activities in the market as we speak. Now, 15, I mean, you just mentioned 16%. That's obviously on the high side. Now, we know that usually the central bank tries to find a balance between what will make investors, foreign investors particularly, happy in terms of the interest rate and, of course, also ensuring that domestic borrowing, especially for the federal government, is not too high. Now, if we're talking about 16% here, going forward, do you think that things could go, the CBN could take certain measures to see rates go back to somewhere around 12, 13, which I'm assuming that will be a lot better for the CBN? The 16% we're talking about is defective. Currently, discount rate is at 14.5. For now, I think CBN is more focused on ensuring that there's stability on the FX market. So the only option they have at the moment is to ensure that the outflows we've seen so far in the year because of the electionary coming on is being maintained. So the only way to do it is to maintain those interest rates at these levels to ensure the funds are a bit stable in the industry. So we don't see them going back to 12, 13 at the moment until the end of the year because of the sell-offs we've seen from the offshore.
Talk to us about the yield curve. It's been an interesting journey for the yield curve in the last couple of months. But what are your thoughts, especially now that this is the last trading day for the month of October? Share your thoughts on that with us.
For today, this is the closing month. We don't see much activities. I think a bit of profit taking has been done yesterday and coming into the week. That was why you saw those sell-offs. We don't see much activities today. Tomorrow, as I earlier mentioned, is the OMO auction, and that's the first trading day in November. That will actually give us a more sense of direction on where we see central bank going from November to the end of the year.
Now, as we talked about earlier, the system liquidity, that's quite robust right now. So are you expecting, should we expect perhaps light to moderate or even maybe aggressive mop-up on the part of the CBN, talking about the OMO mop-ups?
Sure, we see CBN come up to mop-up. The only thing the inflow had done is to keep the money market rates at single digits. But once the OMO auction comes in tomorrow and they sell more than what's matured, that would take up the liquidity, and of course we see rates tend up at those levels.
Rita, thank you for your thoughts today.